And let's talk about Brexit for a minute. So the question got asked just earlier today, actually, on Facebook was, should I invest in the UK property market right now, or should I wait until Brexit is over? So as I'm recording this, depends on whether you're watching the replay or the podcast. It's the 4th of March. We have officially are leaving, but we haven't officially left, not until later on this year, December, the end of December 2020. And so people are kind of panicking in terms of, do I hold on and not invest? Do I spend the money knowing that the property might go up, it might go down? And I say, knowing nobody actually knows what's going to happen. And I say this, and bear in mind as well, we're right in the middle of this coronavirus outbreak right now. This is what I'd say. In stock market investing, you use something called dollar cost averaging, which basically means if you've got £100,000, you don't buy £100,000 worth of shares today, because if it drops tomorrow 50%, you've lost 50%, okay? Obviously, conversely, if it goes up 50%, you've made 50%, but they're risks that are far, far too big. I don't want to be making those risks. I don't want you to be making those risks either. So there's that. Dollar cost averaging on property means that if you're going to start buying property, look, it doesn't matter if prices go up, prices go down. I've been investing for the last 20 years, and I'm what's called a cash flow investor. And the cash flow investing aspect means that as long as my money comes in each and every month, I don't really care. Prices could drop 50%, but then what happens if they drop 50%? Well, it means I can buy property at 50% of its normal price. And if prices are going up 50%, then awesome, my net worth has increased. It just makes it a little bit harder to buy. The £100,000 house is now 150 grand. I've still got to put 20% down. In real life scenario, that 20% on 100 grand was just £20,000. 20% on 150 grand is £30,000. So I just got to put an extra £10,000 in. So really, it doesn't matter. Stop worrying about it. The best time to buy property was 20 years ago. The second best time to buy property is today. You've got to start buying. Because if you don't buy today, in 6 months' time, there'll be something else. Another form of coronavirus, another form of Brexit, another form of high interest rates, an asteroid about to hit us, aliens landing on the White House lawn. Look, it makes no difference what it actually is. Got to get yourself in the game. If you're trying to time the market, in Tony Robbins' book, Money, he talked about people trying to time the market with the stock market. And honestly, the people who tried to buy and tried to time the stock market were not much better off. Even when they timed it perfectly, they weren't better off. You've got to get in the game now. Now is the time to start buying. Don't wait. But a couple of caveats here. For me, like I say, I'm a cash flow investor, which basically means I invest for the monthly cash flow. I want all of my costs covered on the first of each month, and anything extra is profitable. And I want that for you as well. So anything that you do buy it well, buy it below market value if you can, buy high yielding stuff. But your properties have to wash their face, as we call it, like straight away. You can't wait for 6 months and, well, I'll pay a bit of debt down and then the property will make money. No, that's not how it works. Your properties have to wash their face from day one, which means, remember what Robert Kiyosaki says, an investment, an asset is something that puts your money in your pocket from day one, which means if you're buying to let, the very first rental income has to easily cover your mortgage and your costs, and it's got to make you some profit. Okay, £200, £300, £400, £500. If it's a HMO, it should be £600 to £1,000 minimum, £1,500 ideally. You want this to be generating monthly cash flow. So how many properties at £200 a month profit do you need in order to leave work? Most people are on between £2,000 and £3,000. So if it's £2,000 a month and it's £200 per property, you just need 10 properties. That'll cover you. That doesn't mean you leave your job. You've got to create a buffer. So you might need another 5 or 6. And that's what you should be aiming for. Forget about property prices. Prices are irrelevant. Because at this point, I take money out of my pocket, put it on the desk. This pound coin, how much is this pound coin worth? I haven't got any pound coins on me. How much is that pound coin worth? Well, today it might be worth 95 pence, tomorrow it might be worth 105 pence. Who's to say? No one's to say. Society's to say. It's all just made money anyway, complete and utter rubbish. Who says how much his laptop is worth, or his mouse, or his phone? Nobody knows anything. about what value is, and no one is can determine that value. Stop worrying about that. Your job, your key is to get in a game, start generating monthly cash flow. Okay. When you generate some cash flow, use that cash flow to generate more cash flow, and then use that cash flow to generate more cash flow. And in 20 years, you won't care if you bought the property for 100 or 200, as long as it's cash flowing each and every month. It depends on the type of investor you are. I'm a cash flow investor because we pay all our bills monthly, and that's what I want. I can live for the rest of my life. If I'm bringing in 10,000 and a pound, and my expenses are 10,000, and I can live like a king on 10 grand. As long as I'm a pound up above whatever my expenses are, I honestly don't care whether my price of property is worth £10 million or 50 pence. Why the heck would I worry about that? Only when I'm going to sell them, I ain't ever selling. Why am I selling? I'm just going to wrap them up into some sort of trust fund. I forgot the name of it just briefly, but I'm going to wrap that lot up into some trust fund. I'm going to pass it down onto my kids and onto their kids and onto their kids. I ain't ever selling anything. There's no reason for me to be worried about property prices. There's every reason to be worried about what the cash flow every single month is going to look like, and that's what I invest for, and that's why you've got to get started as well. Hope that's useful. Just a quick video. Just wanted to share some thoughts about that and Brexit and property. Hope that's useful for you. We'll speak to you on the next video. Take care.